Hey everyone, welcome back. Today, I'm going to share the exact investing strategies I used to go from having almost nothing to becoming a multimillionaire by the age of 35. And guess what? You can do it too. Now, let me ask you something. Do you want financial freedom? Do you want to build wealth and live life on your terms? If the answer is yes, then stick around because I'm about to break it all down for you. A lot of people dream about getting rich, but most are stuck in a lottery mentality. They're waiting for some magical moment, a lottery win, an unexpected inheritance, or a sudden stroke of luck. But let's be real, do I look like the magic fairy to you? If the answer is no, and I really hope it is, hit that thumbs up button and subscribe for more financial wisdom. Here's the hard truth, winning a big sum of money won't solve all your problems. Without the right mindset and investment strategies, it'll disappear faster than you think. That's why you need a solid, long-term investment plan, one that builds wealth over time. When I was younger, I wanted to be a race car driver. I loved cars, but I didn't have the money to pursue that dream. But as I grew my investments, it gave me the freedom to race, win championships, and even collect trophies like this one. Pretty cool, right? And now, my investments allow me to spend time making these YouTube videos, for you. No gimmicks, no sales pitch at the end, just real advice. There are so many investment options out there: crypto, penny stocks, trendy startups. It's easy to get overwhelmed. Every day, someone's trying to sell you the next big thing that you must invest in. But constantly chasing trends will leave you with less money, not more. The key? Stick to what you understand. I've kept my core investments consistent for years, and that's what's helped me build real wealth. Now, I'm not a financial advisor, I'm just a businessman sharing what's worked for me. But if you're serious about building wealth, let's talk strategy. Step 1. Increase your disposable income. Before you invest, you need money to invest. And the more, the better. A lot of people say, save, save, save. Don't buy coffee, don't go out, don't enjoy life. But I don't agree with that 100%. Yes, saving is important, but there's no point in making yourself miserable over a few extra bucks. Instead, focus on making more money. Learn high-value skills, start a side hustle, or build a scalable business. Don't rely solely on your 9-to-5 income. Find ways to supplement or even replace it. But here's the catch: just because you earn more doesn't mean you should spend more. Look at someone like Ed Sheeran. He's worth millions, but he still lives simply. If you go from making $40,000 a year to $100,000, that extra $60,000 shouldn't go to fancy cars and shopping sprees, it should go straight into investments. Step 2. Pay off high-interest debt. Before you invest a dime, tackle your debts, especially high-interest ones like credit cards and payday loans. These are financial leeches sucking away your money and damaging your credit score. By paying off high-interest debt first, you'll actually save more money than you could ever hope to make elsewhere. Step 3. Build your freedom fund. Once you're debt-free, it's time to create a freedom fund, an emergency fund with 3 to 5 months' worth of living expenses. This gives you control over your finances, whether you want to quit your job, handle a recession, or survive an economic crisis. Now, with your income growing, your lifestyle in check, debts paid off, and your freedom fund ready, it's finally time to invest. Step 4. Start with low-risk investments, index funds. Let's talk index funds, one of the safest, smartest investments for long-term growth. An index fund is a basket of stocks that you can invest in all at once, giving you instant diversification. Instead of putting all your money into one company, you're spreading your risk across hundreds of top-performing companies. For example, if you invest $1,000 in Apple stock and Apple tanks, you lose big. But if you put that same $1,000 into an S&P 500 index fund, you'll own a piece of Apple, Microsoft, Amazon, Disney, and more. If one company struggles, the others balance it out. Step 5. Why I avoid mutual funds. Some people prefer mutual funds, which are like index funds but managed by an expert trying to beat the market. The problem? High fees. A typical mutual fund charges 1 to 2% in fees every year. That might not sound like much, but over time, it eats away at your returns. Compare that to an S&P 500 index fund, which charges as little as 0.07%, that's just $7 a year on a $10,000 investment, versus $200 plus for a mutual fund. For long-term investing, I personally love Vanguard index funds. No sponsorship, I just think they work. Step 6. Real estate, my favorite investment. Now, let's talk real estate, my personal favorite. Unlike stocks, real estate is something you can see and touch. My first property was a one-bedroom apartment I bought for $50,000. I lived in it, then rented it out for $500 a month. 10 years later, I sold it for $150,000, a 3x return. That's when I got hooked on real estate investing. At this stage, you need to decide what type of investor you want to be. Capital gains investor, you buy low, sell high, and pocket the difference. This works well, but it depends on market fluctuations. Cash flow investor, you buy properties and rent them out for consistent monthly income. This is my preferred method because it creates passive income. Both strategies work, but I focus more on cash flow. Rental properties pay me month after month, whether I'm working or not. Final thoughts. Building wealth isn't about luck, it's about strategy. Increase your income. Pay off bad debt. Build an emergency fund. Invest in index funds and real estate. Stay consistent. If you're serious about financial freedom, start taking action today. Make sure to subscribe for more wealth-building tips, and if you found this valuable, drop a comment below and let me know your biggest takeaway. Until next time, go out there and start building your future.